All right, hi everyone. Apologies for the delay. Welcome today to today's live analysis session brought to you by IC Markets webinar. All right, hi Tariq. Good to see you. All right, just want to make sure everyone can hear me loud and clear and see my screen as well. You should be seeing the first slide for IC Markets webinar live analysis session. All right, and do drop. Hi Kelvin, great to see you. Right, so do take note of the live chat box. Yeah, please drop all your requests and questions here and I'll be happy to go through the analysis with you. All right, so yeah, just can you hear me as well? Just want to make sure you guys can hear me loud and clear. All right, okay. Okay, right, of course, first off, let's start off with the disclaimer. Any information in this video does not contain and should not be construed as containing investment advice or an investment recommendation or an offer or solicitation for the transactions in financial instruments. All information is presented as educational material only. And also do take note of the risk warning that comes with trading CFDs. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. All right. Okay. Thank you, Kelvin. All right. Okay. Everyone can hear me loud and clear. All right. Okay. So, my name is Ketan Rameshchandra. I'm an investment analyst here at Everest Fortune Group. So, this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years 2019, 2020, and 2021. All right. Before we dive into the analysis, let's uh, take note of the key economic events that are coming up this week. Right, we have two central bank rate announcements, followed by inflation data out of the U.S. as well. So we have the Reserve Bank of New Zealand announcing their cash rate statement on the 12th of July, followed by the Bank of Canada uh, on the same day, on the same date, but later on in the evening. And on the 12th of July, we have consumer inflation data from the US, followed by producer price index on the 13th. All right. So do take note, these are key economic events that will have a very high impact on currency markets and as well as gold and probably equity markets as well. Right. So if I switch over to Forex Factory. I'm sure all of you are pretty familiar with this. So I've set my time to GMT times UTC plus 0, and I've set the calendar from 10th to 14th of July, and I've selected only the two most high impact events. All right, so as we can see, there's a few things going on, but the main ones that I want to highlight were the RBNZ rate statement that's going to be released at 2 a.m. on 12th of July. Then we have a couple of central bank governors speaking as well from Australia and England. And of course, we have the all important inflation data coming out of the US. So if we see CPI on an annualized basis, we can see that's been dropping pretty sharply. So that's great. The core CPI reading has not been retreating as sharply as the headline reading. If that starts to follow suit, right, it's very likely we can see the US dollar continue to weaken, and that would mean gold should start rising higher, and of course all the other currency pairs will react accordingly to a falling dollar. And then we have at 2 p.m. the Bank of Canada releasing their statement and the official cash rate or overnight rate as well. Their current rate is at 4.75%, and the forecast is 5%, so they're expected to raise it by 25 basis points. Whereas for New Zealand, the Reserve Bank of New Zealand, they're expected to keep rates on hold. All right. And of course, And then on Thursday, we have the PPI data, which is Producer Price Index. This measures wholesale inflation in the US. That is going to be key at 12:30 p.m. Followed and together along with unemployment claims as well. Right, so we can see unemployment claims have been sort of ranging between 240,000 and 255,000, right? So if a number comes in higher than the forecast, right? If the actual reading, sorry, comes in higher than the forecast, that means more people are applying for benefits or unemployment claims. So this would mean that the labor market is starting to loosen or to show signs of some initial cracks, and that means the US dollar should fall, right? And conversely, if the reading is lower than the forecast, that means the labor market is still relatively strong, and that means the US dollar should strengthen, right? That's the basic premise for unemployment claims. All right. Okay. Okay. Right. Now we're going to dive into the charts. We'll start off, of course, with the dollar index. All right. Let's just go start off with the daily chart to see where we are. Right. Okay. And do take note. Please drop all your questions and requests in the live chat box, and I'll be happy to go through the analysis for any particular currency pair or commodity, or even any of the indices as well. Right. Okay. So here we are on the dollar index daily chart. We can see that since middle of June there was relatively strong demand for the US dollar, so hence naturally the dollar index would rise, and also there was fundamental reasons for it to rise as well. We had relatively strong employment data coming out as well last week. Okay, so if we want to do, let's look at where some of the immediate resistance and support levels are. Right, we can do a Fibonacci retracement from this swing high on 28th of September going down to the swing low on 2nd of Feb. Right, so once price moves above a certain Fibonacci retracement level, we do know that this level is no longer valid, so we can get rid of it. We can also see that 38 lines up well with this overlap here as well, with this overlap at 106.30 as well. So we just keep the 38%. Okay, and then we can try and find some other levels as well. All right, okay, so we can do a Fibonacci projection from this swing high on 8th of March going to the swing low on 14th April and ending at the swing high on 31st of May. All right, so we can see where we can identify potential support levels for the dollar index. All right, okay, so at least at an immediate resistance level on the daily chart, what should be quite obvious at the start, we can see that there is a multi uh, swing high resistance here, right? So I'm going to label this as my first resistance. Okay, in terms of support, we can also see that this recent swing low that occurred in mid-June does look to be the first region of where the first support should be, or close to where the first support would be. And if I were to stretch it even a little bit back further, we can see a pretty decent overlap here as well, going all the way to here. All right, so in terms of more immediate and actionable levels, this is where I would set my first resistance and first support as well on the daily chart. All right, and in terms of the next support levels, naturally we can use this swing low here on the 2nd of Feb, and it forms a nice overlap with price on the 13th and 14th of April as well. So we'll label this as our second support. Now in terms of the second resistance, we can see here there's a multi swing high here, multi swing resistance here as well. So we can use this as our second resistance level as well. Okay, now we can see because okay, what happened last week? Why did the dollar sell off pretty strongly on Friday, right? Okay, so we can see it was due to the NFP numbers that were released on Friday, 7th of July. Okay, so we did have the Bureau of Labor Statistics announcing the non-farm payroll numbers as well as the unemployment rate. Although we can see the unemployment rate edging lower, the previous month, for the month of May, it came in at 3.7%. For the month of June, it came in slightly lower at 3.6%. And in terms of employment changes or jobs being added to the economy, there was a forecast of 224,000 jobs, whereas the actual reading came in at 209. So because this was a miss in the data, so this was perceived to be as negative for the US dollar. So do take note that whenever the employment change number comes in higher than the forecast, this would imply that the labor market is still strong, the US economy is growing, so thus there would be more demand for the US dollar. And conversely, if the actual data comes in lower than the forecast, we call it a data miss or a results miss, and that would mean the dollar should sell off, which is what we saw last week. So this here I am, my crosshairs on the candle for the 7th of July. We saw the dollar index going from as high as 103.30, dropping to as low as 102.20. So dropping almost 100 pips in a day. Right. This was purely, well, not purely, but part of the main catalyst. I would say the main catalyst for this downward move would be the miss in the NFP numbers. Right. 209,000 came in slightly lower than the estimate or the forecast of 224,000, which meant the dollar was selling off hard. The dollar index fell, and naturally, euro would be rising, cable would be rising, dollar yen would be falling. Okay, so these are some of the more immediate levels. Okay, let's just zoom in into the 4-hour chart and try and find and fine tune the analysis for the dollar index. Okay, so yeah, first resistance would probably be, yeah, somewhere, yep, around here. Right, you can see it pretty decent. Okay, now there's not such a good overlap over here, but probably, yeah, this is a pretty decent overlap. We can also try and find another set of Fibonacci retracement levels. Okay, starting from the swing high on 31st of May, going to the swing low on 22nd of June, right? This looks like a pretty good move as well. Let's just pull up all the fibs. All right, so what we can see clearly is the 50% lines up pretty well with the first resistance level or the first resistance overlap. Although we can argue that price has closed above this Fibonacci retracement level a few times, a couple of times at least. I think it's just good to put it on here just to give us an indication of where price has retraced up to since the swing low. And then the next levels that we could keep would be just 78.6. So what I'm going to do is I'm just going to get rid of everything else and keep 50 and 78.6. And with regards to the second resistor, just to fine tune it a little bit more, we can probably just set it around here at 104.35. We can see that it lines up just slightly above the 78.6% Fibonacci retracement. Okay, in regards to the first support, I think this is fine. Generally, okay, we do see price breaking lower here on the 22nd of June, but otherwise, when you look at it on a daily time frame, you can see that the first support at 102.065 does look like a pretty good overlap level as well. Right, okay, and then I think second support is fine for now. If I were to try and, no, I don't really see any other decent level for the second support. Although it may seem a little too far, but I think let's just keep it on for now. What we can use is probably the 61.8% Fibonacci projection here, and use that as an indication of where price could find support in the future should this initial first support at 102.065 be broken, right? We can see there was some strength in the dollar or some demand for the US dollar early this morning, which then reversed as European markets started coming online. So dollar weakness does seem to be the theme for today, driven fundamentally by the miss in NFP numbers last Friday. So I think we can expect the dollar index to drift lower and come towards the first support at 102.06. So naturally, if we expect dollar weakness and demand and dollar index to drift lower, that means the euro should be going higher, right? Okay, so this is what we see here, right? There are some levels already identified here. So let's start off with a clean slate so we can do the analysis together, and then it will be more beneficial for everyone. All right, so first off, I'm going to do a Fibonacci retracement from this swing high on 4th of May going down to the swing low on 31st of May. So obviously, or naturally, as we can see, oh, thank you, Peter. Can you hear me now? Is this slightly better? Just let me check the mic volume. Right. Hi, Philip. Or Peter, sorry. Can you hear me now? Is this better? Right. Okay. Okay, so sorry. Okay, maybe I'll just speak a little bit more loudly. Okay, so as we can see, price has uh, uh, moved up from the swing low on 31st of May. All right, hi, good morning, Amar. Good to see familiar names as well. All right, price has moved up, and naturally, if it once it breaks above these Fibonacci retracement levels, they're no longer valid. So we will just keep 78.6 for this part of the leg, or for this part of the move, right? And so we can see the immediate resistance level for the euro coming in just slightly above where the 78.6% Fibonacci retracement is. So we can set this as our first resistance based on the 4-hour chart, and the second resistance would be at the swing high on 4th of May, right? Okay, that's where our second resistance would be. Now, in terms of support, how can we identify some of the more actionable support levels? Well, we can use this swing low here on the 6th of July, going to the swing high on 7th of July last week. We can try and identify some uh, more immediate or actionable support levels. So what I can see here at 38.2% Fibonacci retracement, we do have a pretty decent pullback level as well. So for this, I will just keep 38%. Right, so we can see that price has found support and resistance at 1.0916 multiple times, starting from 20th of June till 3rd of July, right? So we saw the euro finding support at this level, 1.0916, and 20th of June, finally breaking through the level and then finding running into resistance back last week at on 3rd of July. So this is where our first support level can be identified with a combination of an overlap and the 38.2% Fibonacci retracement level as well. Now, with regards to the second support, I think this one should be pretty straightforward. We can use the multi-swing low here at 1.0838. Right, this would be where we can identify the second support for the euro. Right. So as we expect dollar index to weaken, so naturally the euro should be rising. So in terms of an intermediate resistance, we can see that this level here at 1.0976, or roughly around this region, you can see price running into resistance here a couple of times. It happened on the 27th of June, and it happened last week as well. So you can see there's a intermediate resistance level for the euro as well. So should price break through this intermediate resistance at 1.0976, then it's very likely we can see it make a move towards the first resistance at 1.1. This is where we expect significant headwinds to come into play for the euro. So do take note of uh, the intermediate resistance level at 1.0976, and of course the major overhead at 1.1. All right, next we'll swing over to the pound. All right, so sterling pound has naturally with the dollar falling last week on Friday, we pound was surged higher as well. Right, so let's see where can we pull our Fibonacci retracements to help us identify support and resistance levels. I think what should be pretty clear is the first immediate resistance would be at this recent swing high, and also the recent swing high that, and then a previous swing high, sorry, that happened on 16th June. So we had the recent swing high last week, 7th of July, and the previous swing high on 16th of June. So this is where we would set our first resistance. So first resistance is at 1.2848, and let's see for second resistance, because pound has reached yeah, it has reached more than a 52-week high. So the next immediate resistance, at least on the 4-hour chart, looks to be somewhere around this level here, which is 1.2981. That's pretty far off, but let's just keep it there to remind us that this is where the next major overlap is. You can see a nice overlap here, right? So this is where the next resistance level would be, but that's pretty far off. But just keep it on there for reference. Okay, now with regards to um, support is okay. We can also do a Fibonacci retracement from this swing high on 16th of June to the swing low on 29th of June. And pull up all the fibs. Okay, so we can see a nice V-shape Nike tick movement as well in the price. So should price break above the 100% Fibonacci retracement, the next immediate resistance level should be coming in at 127.2%, right? So this is the Fibonacci extension level of 127.2. So this is where we can expect the next resistance to come in. So although there's no overlap here, but we can use this as our next resistance level. So based on the Fibonacci extension on this move here, that starting from 16th of June and ending on 29th of June. Okay, so I'm just going to keep 127 and remove all the others. Right, okay, now what about support levels? Okay, so we can use this swing low on 29th of June going to the swing high on 7th of July. Right, once again, we pull up all the fibs. Okay, so I can see a pretty decent, like a pullback support around a 38.2% Fibonacci retracement. And also we can see another pretty decent pullback or overlap support at 61.8% as well. Right, so I'm just going to keep 38.2% and 61.8%. Okay, so we can just use this level here. So we have a combination of a decent overlap level plus the Fibonacci retracement at 38.2%. Similarly, for the second support, we can see that this support level here, there's a nice overlap starting oh, okay, this is probably not so good. Probably, I think I'll just keep it around here, yeah, starting from here. Okay, if I were to zoom out, sorry, let me zoom out a little bit. No, okay, so we can use this level at 1.2691 as a second support due to the combination of the Fibonacci retracement level at 61.8%, as well as an overlap or a pullback level here as well. So we have two factors contributing to the identification of this second support level, right? So if you look quickly at what the dollar index is doing, okay, so dollar index seems to be rising now uh, as we go into lunch in Europe. So we may see the dollar retrace a bit higher, perhaps before pulling back down. So okay, let's see where are the more uh, actionable resistance levels or more immediate resistance levels. So for dollar index, we can see we can do a Fibonacci retracement here. Right, okay, so we do see some resistance at 23.6%, so let's just keep 23.6, and this would be a level where we can we would identify it as a intermediate resistance. So do take note, for the dollar index, 102.55 is an intermediate resistance level that is identified with the 23.6% Fibonacci retracement. Right, so going back to the pound, right, we can see naturally as dollar index is rising, pound is falling, euro should also be falling as well. But yeah, let's see how far it pulls back before we may see this pair start to rise again. All right, now let's switch over to dollar yen. Okay, so for dollar yen, we've done a Fibonacci retracement from the swing high back in October last year to the swing low down in middle of January of this year. And naturally, as price moves up, all the other Fibonacci retracement levels become invalid. Uh, Thus, that is why we are only keeping 78.6% here. And we can also see a nice overlap at 145.13. We can see multiple instances where price has reacted off this level as a resistance and then as a support, and finally more recently as a resistance at the end of June. Right, so this is how we have identified the first resistance level, and you could argue that there's a zone between this level at 145.13 up to 146 68. Right, okay, so in terms of the first support uh, level is found, or the zone is found via a combination of the overlap level at 142.49. You can see back in September of last year, price finding support over here, then finally broke through, then running into resistance back in November of 2022, then running into some resistance again back in middle of June before finally breaking higher, and now it's acting as a pretty good support level, right? And also we've also done the Fibonacci retracement from the swing low here on 24th of March, running all the way up to the swing high on 29th of June. So we can see that the 23.6% Fibonacci retracement level lines up pretty well with a pullback support here at 141.48. So we have a resistance zone, or support zone, sorry. We have a first support zone that runs between 141.44 all the way to between 142.13, right? So we can see price has reacted or bounced off this level last week. It retraced higher this morning as well and seems to be making a second attempt towards the first support. But now you can see recently uh, some demand for the US dollar has started to re-emerge, and we can see dollar yen starting to consolidate above this first support level and perhaps move a little higher for the next 1 or 2 hours. All right, so in terms of Fibonacci retracements, we can probably do a retracement here. Try and see if we can identify any other immediate um, resistance levels. Right, so the level at 38% looks pretty good. Okay, let me clean it up and then we can see why that's the case. We can see there's a nice little pullback support here back on 26th of June, some pullback resistance here on 22nd of June, and also recently here last week as well. So I think this level here would be this level at 143.23 would be a good level to identify as an intermediate resistance for the dollar yen. Okay, so if dollar demand were to come back in, and if dollar yen were to break through this 38.2% Fibonacci retracement level, then it's very likely we should see confirmation of the bullish move in dollar yen, and at least going up at least towards 144 to 144.50 at the very least, should the intermediate resistance at 38.2% be broken. Right. Okay, let's perhaps go into gold now, right? So if we look at gold, gold peaked in the on the 3rd of May, climbing above $2,060 per ounce, and ever since then largely been in a downtrend as the dollar index started to go higher as well. You can see there's a bit of disconnect between gold prices and the dollar index, right? So the gold spot prices peaked on the 3rd of May and have been falling uh, since then, falling all the way down to 29th of June, where it made a swing low and then bounced higher. Whereas if you look at the dollar index, uh, despite the dollar index actually falling around the same period, gold didn't uh, gold didn't fall, right? Because we do understand that there's a negative correlation between the dollar index and gold prices. So that means if the dollar index is falling, we should expect gold prices to at least at least be supported and probably move higher. And as the dollar index is rising, we expect gold prices to be suppressed. But that negative correlation isn't playing out as perfectly as it should be. So that is why it is important to take note. It's always use the correlations, whether they're positive or negative correlations, as a guideline. Do not use them as a rule, because you can see correlations can break down over time, or over certain periods of time, and then that correlation or negative correlation may come back in and start to show more significance. All right, now let's just see where we are uh, for the price of gold. Right, okay, we can do a Fibonacci retracement from the swing high on 3rd of May going to the swing low here on 29th of June. We can pull up all the fibs first so we can see. All right, there's some resistance here at 23.6%, as well as a pretty decent overlap. 38.2 is here. So let's just keep 23 and 38 because these are the more actionable levels. Right, then in terms of support, we can also do a Fibonacci retracement from this swing low on 6th of July, going to the swing high on 7th of July, and try and find a few more immediate support levels. Sorry, this looks a bit messy, but okay, you can see 50, perhaps 50%, and perhaps 61 as well. Okay, so let's just keep 50 and 61 first. Right, okay. So in terms of immediate resistance levels, you can see that this level at 1933 lines up pretty well with the 50%, 23.6% Fibonacci retracement level, and we do see uh, multiple instances where price has recently run into resistance here. So that is why we're using it as our first resistance. We could, yeah, so I wouldn't drag it this far. I would probably set it just about here. So first resistance at 1933, a combination of an multiple overlap resistance, plus the 23.6% Fibonacci retracement level. Now in terms of second resistance, probably if we would see the 38.2 here, probably just above here. Yeah, just above here. It's a little bit far, but let's just set it there because we see a nice overlap here. Some multi-swing highs going on here at 1966. All right, hi Besta. All right, sure, we'll have a look at Euro Aussie as well. We'll have a look at Euro Aussie. We have time for that, so we'll definitely go through that once you're done with gold. Right. So in terms of support, um, we can see that price has reacted off the 50% Fibonacci retracement here. So we can probably just use this level as an intermediate support. It is not really a major significant level, right? We don't see any major resistance or support, sorry, here, but we do see the very clear uh, reaction of the 50% Fibonacci retracement. So that is why we will set 1919.35 as an intermediate um, support level. Now, with regards to the second support, I think the first support would I would use this swing low here on 6th of July as our first support here, right? It would be just purely a swing low resistance, having a pullback and then bouncing higher. So that's where our first support would be. And for the second support, there's no really nice overlaps as well. So once again, I'll use the swing low here on 29th of June as the second support. Okay, so naturally we can see this correlation in recent times starting to, or this negative correlation coming into play. So when the dollar index was falling rapidly from 6th July till 7th of July, the gold prices staged a rebound as well, right? You can see it clearly here. 6th of July, gold prices going from 1,906, rising as high as 1,933 all the way last Friday. So this is where we can see the negative correlation coming into play and holding relevance, right? You can clearly see the relevance of the negative correlation in play. Dollar index falling from 103.40 down to as low as 102.20, and at the same time gold spot prices climbing from 1,906 going to a high of 1,934. So once again we see some demand for the US dollar coming in, and should the dollar index remain under 102.50, then it's quite likely we should see the dollar weakness theme continue at least for the rest of the day. Right, okay, so going back to gold. Right, so we can see here, similarly, there's an intermediate support for gold prices at the 50% Fibonacci retracement level as well. All right, that was a request from Bester to have a look at the Euro Aussie, so let's do that. Okay, right. Let's just start with a daily time frame. All right, Kelvin, yeah, pound yen. Yep, we'll definitely go through pound yen as well for sure. All right, let's just start off with a daily chart. So we can see, right, okay. So we can do Fibonacci retracement here. Oops, sorry. We can do a Fibonacci retracement from this swing high on 28th of June going down to the swing low on 5th of July. We'll pull up all the fibs because once again we can see a very nice V-shaped bounce, so otherwise known as a Nike tick. So we can see where we can use the Fibonacci extension levels to try and identify some of the other support levels as well. Okay, so we can use this swing high here on 26th of April as as one of the resistance levels. I just label it as the first resistance. Okay, let's just label it as the second resistance for now because we can use the swing high last week as the first major resistance, which we see price starting to test this level. Okay, so we can use the recent swing high from last week as the first resistance level, and then in terms of support we could, okay, so wait, let's just clean up the fibs because all the other fibs here from 23% all the way to 76% are no longer valid, and maybe we'll just keep 127 on as a guide. Okay, So this, remember, we're still on the daily chart for the Euro Aussie. Aussie being very weak today, so naturally all the other pairs are gonna gain versus against it. Okay, so this is where we can see. Okay, and in terms of support levels, naturally the swing low here on the 4th of July would be our support level. Perhaps this would be the second support level once we zoom in on the first. Okay, we can probably use this here. Yep, we can see a decent overlap as well. Okay, let's just zoom in onto the 4-hour time frame to identify more actionable levels. Right, okay, and we can also try and use Fibonacci projection. Wait, let's see. Oops. Oh, what's wrong with? Okay, wait. Okay, so I've done a Fibonacci projection from the swing low on 4th of July, going to the swing high on 7th July, and ending at the latter part of 7th July as well. So we can see the 78.6 Fibonacci projection level lined up pretty well with this first resistance here. I'm just going to adjust my first resistance a bit. Right, on the 4-hour time frame, we can fine tune the levels, and you can see it lines up well with the 78.6% Fibonacci retracement. And for the 78, no, okay, and then yeah, so we'll just keep 78.6%. Right, so we have a combination of the Fibonacci projection level at 78.6% plus the recent swing high on 28th of June to use to try and identify the first resistance. Hi, sorry. All right. All right. Hi, everyone. Sorry. Is this better now? Right. Apologies. I think this setting wasn't okay. Maybe this is better. Okay. Right. So we can see. Ooh, too loud. Okay. What about now? Sorry. Hi, Calvin. Is this better? Okay. Sorry. Apologies, guys. Okay. I've managed to find the right level for the mic. Okay. So okay, we had the 4-hour chart. Yeah. So we've done a Fibonacci retracement here. We did it because we were trying to identify where the next resistance levels could be, because we don't see any good overlap levels. So we've kept the 127.2% on as a purely as a guide. We've done a Fibonacci projection here from the swing low on 4th July going to 7th July and ending here the latter part of 7th July. And we're using the 78.6% Fibonacci projection level together with the recent swing high to identify the first resistance. So we can see price clearly starting to run into resistance close to this level. And on the support side, we can see a pretty decent overlap as well. We can see price bouncing off 1.63.76 here last week. We can also see price finding support around this level back in 29th of May as well. And with regards to the second support, we can see the swing low here, or multi-swing low here, that was formed in the early part of July. Oh, and if I can even stretch it all the way back here, so roughly till all the way to 27th June. We can see a nice V-shaped bounce in price action back on 27th of June as well. All right, so these are the support and resistance levels for the Euro Aussie based on the 4-hour time frame. Now let's go over to pound yen. Okay. Okay, pound yen. Right, okay. Let's just start with the daily time frame as well to see where we are. Yeah, pound has made up. Oh yes, this is. If I go to the weekly chart, yeah, pound yen is making like a 8-year highs pretty much, right? Coming to 8-year highs. So we are at pretty elevated levels for pound yen. So we may start to see some serious resistance being built here. All right, about divergence here. All right, perhaps, yeah, I think there should be some divergence here. Oh, okay. Uh, with regards to the V shape, okay, what we mean is we are referring to like a hang on, like a nice Nike tick sort of. Okay, so when we do a Fibonacci retrace, okay, let me do it on a 4-hour chart. Right, so we're using the Fibonacci retracement from the swing high to the swing low. We can see price following the trend line, capturing the price structure pretty well. And when we see a nice V-shaped recovery or bounce in the price structure, right, we can use the extension levels, the Fibonacci extension levels, to highlight potential resistance areas, right? So when we see price bounce back here and move up in a fairly uh, good structure, price structure in a clean manner, we can see that should price break above the 100% Fibonacci retracement level, then the next retracement, the next resistance area should be coming up close to where the 127.2% Fibonacci extension level is. All right, okay, so let's go back to pound yen. All right, so pound yen, like I mentioned, it's reaching 8-year highs. Okay, so let's go to the daily time frame first. Okay, naturally the first resistance would be where the recent swing highs happen. Right, so we've had a multi-swing high price action here, and with regards to the second resistance, okay, let's just stay on the daily time frame. And okay, we can also use a Fibonacci retracement starting from the swing low here on 3rd of January going to the swing high on 5th of July. Okay, we can see price, okay, probably is not capturing the... Okay, so what I generally like to see is the trend line, the Fibonacci trend line, capturing the price structure as close, as cleanly as possible, as close as possible, right? Over here, we could see that although it was price structure was still rising, but for most periods of time, it didn't. The trend line wasn't capturing the price structure so clearly. Maybe it depends, right? Maybe for some this may still be a suitable Fibonacci retracement starting and ending point to use, but for me, I would probably use it from the swing low on 24th of March going up to the swing high on 5th July, because I find the trend line captures the price structure much more better. All right, so when that happens, generally when the trend line captures the price structure as close as possible, then the subsequent Fibonacci retracement levels usually tend to act as more or offer more significant support levels, in this case support levels or resistance levels. All right, so on a daily time frame, we can see, okay, 23.6% is pretty far off. I can actually see a nice overlap here on the daily time frame, right? A pretty decent overlap. So maybe this is where our first support would be. You can see price running into resistance here on 19th of June, breaking out, finding support on 29th of June, and again finding support last week as well. Okay, so these are more immediate levels, and we can also see that this pullback on 20th of June, we can use that as the second support. So 180.52 is the second support, first support is at 182.56, and first resistance is at the swing high, which is at about 183.80. Okay, what else can we do? Can we do any Fibonacci projections to try and find the next immediate resistance? Probably. Okay, we can try and do... Okay, this is simply too far. Okay, maybe let's just zoom in onto... Okay, wait, first, which Fibonacci retracement should we keep? Okay, the other levels are all too far. Let's just keep 23% as a reference because all the others are way too far. Let's zoom in onto the 4-hour time frame. Right, okay, so now we can fine tune our levels because we had initially placed the levels based on the daily chart. So for the second support, I would probably place it here at 180.10 for the first support. I think where it was initially. Okay, it's not the best of levels, but okay. But 182.05 would probably be sort of an acceptable level to select. And for the first resistance, we'll just put it at the swing highs. All right. Okay. Now, what about uh, potential the next potential resistance? So we'll do a Fibonacci projection here. Right. Okay. So I've done the projection from the swing low on 20th of June, going to the swing high on 5th July, and ending with the swing low on 7th July. So I get the first projection level at 78.6%. So this is where we can probably identify our second resistance at. And if you zoom out, I don't. Oh yeah, this is a 8-year high on the pound yen. Okay, so we've used a combination of overlap supports and resistance and swing high resistance together with Fibonacci projections to identify the second resistance here. First resistance identified via the recent swing high. First support is a pretty decent overlap here at 182.05, and second support is at the swing low on 20th of June. All right, okay. Right, we still have time for one more request. So if you guys have anything, if you would like me to have a look at, please do let me know. Otherwise, we'll just recap some of the analysis that we've done for today. Right, okay. Right, so this is pound yen. And let's just start NASDAQ. All right, sure, Kelvin. Okay, we'll do NASDAQ as well. All right, so NASDAQ would be here we go. So now let's go back onto which pair. Okay, there's a question by Yulina as well. Which is the easiest pair to trade now? Okay. All right. Let me see. Okay, let me do Nasdaq first. Then since we're indices, then we'll do quickly do DAX, and then we'll end off with which is probably the easiest pair to trade. Let's see if we can find something like that. Okay, so here we are on the weekly time frame for the Nasdaq. Okay, so we can see. Right, first off, let's try and okay, should I use the daily chart to begin my analysis? Okay, maybe let's just use the daily chart. Okay, so we're going to use this swing low here on 28th of December, going to the swing high on 16th of June. All right, you can see price, the trend line capturing the price structure pretty decently. Okay, are there any better levels? No, it's probably about the same over here as well. Yeah, probably. Okay, so let's just keep it over here. All right, so in terms of immediate resistance, so naturally the recent swing highs would be the recent resistance, and it lines up well uh, with price reacting off here back in February of 2022 and again in March. So this is definitely clearly our first resistance. You can see price running into major overhead barriers here multiple times. And in terms of immediate support, you can see a nice pullback here as well. So price ran into resistance here on 5th of June, finally breaking out and then finding support just above it here. So this would be our first support in terms of overlaps. Okay, then okay, and the second overlap would be where the 23.6% resistance Fibonacci retracement is. So this is where we would set our second support level. And for the second resistance in terms of overlaps, can we see any other decent levels? Okay, no, not really. Maybe can we use a combination of Fibonacci projection to try and find No, probably. Okay, maybe we can use the 100%. Okay, why do we use the 100%? Because we can see price reacting off this level a couple of times back on 3rd of December 2021 and 21st December 2021. So this level does seem to offer some significant resistance, and it also lines up well with the 100% Fibonacci projection as well. So I'm just going to leave the 100%. You can actually keep 68 as well, just as a guide. Uh, yeah, 61.8, we can keep that as well. So we can see, yes, okay, so in terms of resistance levels for the Nasdaq, do take note that the first resistance comes in at 15,275, second resistance at 15,716, which was formed, which was identified via the Fibonacci projection. First resistance is identified by a nice overlap or significant overlap. First support is found also by a overlap support or a pullback support here at 14,672, and the second support level is identified via a combination of the 23 retracement level at 23.6% and the pullback here, the double pullback here on 1st of June and as well as 8th of June. So second support is at 14,212. All right. Okay, now for the DAX, there's Germany 30 here on this instrument. Right, so DAX made an all-time high back in mid of June, going what, 16,423. Right, so it made an all-time high. It's been pulling back since. Right, so let's try and identify. Okay, naturally, since this is the all-time high, you could say the main first resistance would be, one of the major resistance levels would be here at 16,316. Let's do a Fibonacci retracement. I think where does it capture the price structure pretty cleanly? Ooh, here, okay, it's not too bad. It's not the best, but I think it should be good enough. What else can we do? Okay, we can also do a Fibonacci retracement here from this swing high down here to the low, and here this we are doing this to identify potential support levels. Okay, yes, okay, yep. So we can see the 100% projection level has identified a potential support area, and we can see price clearly bouncing off this here. So this is where we would identify at least an intermediate support. Where is it? All right, here we go. So we're going to use a dotted line here. Um, then in terms of major, and there's no real other significant. Okay, we do see a pullback here. I think, yeah, this level here. Right, I think we can put this as our first support. You can see a pullback, a small pullback here on 5th of April, and we see price bouncing off this level again last week. And by using the Fibonacci projection, we can see that the 100% projection level lines up well with this overlap as well. So I think we can use these two factors to identify our first support. First resistance would naturally be around here, close to the swing high. Second support, let me see, where can we go for second support? Or maybe we can try and identify the second resistance going from this swing low here. Maybe can we use this broken out? Okay, maybe not. Okay, anyway, second resistance is probably a bit too far from where price is currently trading, so I think the first resistance level that we've identified should be good enough. Okay, second support, yeah, that should be key. Where can we identify the second support? Let's see, can we do a Fibonacci retracement? No, it's not a very good. No, this looks okay. I think in terms of the second support, yeah, probably somewhere here close to where the 23.6% retracement is. Right, it's not the ideal level, but even because price structure is not so clear here, right? You can see it's pretty messy. So um, I think using the combination of the Fibonacci retracement at 23.6%, plus we can see a decent overlap uh, with regards to price action at 15,266. Yeah, we can see the DEX bouncing off this level of multiple times since earlier this year. So I think this is what we can use to identify our second support for the DEX. All right, okay. Um, okay, with regards to what is having clean price structure, I think if you look on the daily time frame, probably dollar yen, I would say, right? Dollar yen is probably having a very clean price structure. We can see the strong clean move down here, but of course retracements along the way. And then especially since 27th of March onwards, we see a very strong bullish uptrend with pullbacks along the way. Naturally, we can see a nice support here as well, a double bounce here before going higher, and then we can see price finding support here again at this pullback level. So I think in terms of price structure, what I see clearly, at least on a daily time frame, would be the dollar yen, right? So if you were to do your analysis for the dollar yen on a daily time frame and then zoom in onto the 4 hour time frame or perhaps the 1 hour time frame to fine tune your support and resistance levels, you could probably find pretty good entry and support levels or trade ideas or trade setups for on this pair. All right. So okay, everyone, I've come to the end of today's live analysis session. So do take note of the calendar for this week. Right, we have two important central bank announcements. We have the Reserve Bank of New Zealand uh, announcing their statement on 12th of July, 2 a.m. GMT. Then we have the Bank of Canada at 2 p.m. later on that day, 2 p.m. GMT, where they are expected to raise their overnight rate by 25 basis points to bring it up to 5%. New Zealand, the Kiwis are expected to keep their cash rate on hold. They're not going to be raising rates. And of course, with regards to US data, do take note of the inflation data, CPI on 12th of July and PPI on the 13th of July as well. All right. Right. Thank you everyone for tuning in, and I hope you managed to catch Desmond's pre-market live analysis as well, where he sets the outlook for the whole week. So if you have not watched that, do go on to YouTube and search for Desmond's pre-market live pre-market analysis on the 9th of July, right, to give you a really top overview of most of the FX pairs and even crypto as well. All right, thank you everyone for tuning in. Hope this has been a great session, and I'm looking forward to catching all of you at the next one. All right, till then, take care and have a great trading week. Thank you, everyone.